Hey guys, I'm Speculator Seth, and I wanted to make another video today in addition to my regular stream because the treasuries are moving and it makes me excited, and I have to talk about it. So, for those of you that are new to the stream, treasuries has kind of always been my thing. I'm not saying that I'm good at trading them, but that is what I like to trade 10-year treasury futures. But lately, I've been more of an equities trader because the treasuries just aren't moving. Really, the Federal Reserve is going to keep interest rates low until basically the end of time, and there's not a whole lot of reason for them to move. Well, that was until about 2 or 3 weeks ago. They've kind of been slowly moving up. Now, I think a lot of this is just because there's still expectations that there will be further monetary easing around the globe, right? The Federal Reserve is printing a lot of money, everybody's printing money, and there's going to be a third stimulus bill in the United States. So, that's moving treasuries up because money printer continues to go burr, right? Well, today's move was a little bit more dramatic. So I did some searching what's going on. And one of the things that will move the treasuries that we know about is offerings from corporations and banks, like bond offerings. Okay. So for instance, Google earlier in the week announced a really big bond offering. This bond offering was to help them with environmental and sustainability initiatives in the company, but it was a really big offering. And as a result of that offering, the prices moved down, right? Because that's basically more supply coming into the market. So prices move down. There's more bonds out there. Okay. And all of the treasury traders will come out and sell the treasuries to lock in those interest rates because, the rates are going to increase a little bit. Well, another item that happened this week that I think is really driving a lot of this current move is that there's a survey that has to do with the lending standards and lending demand at the banks. And what we're finding is that the banks are actually increasing their lending standards and that there is less demand for bonds right now. Okay, which means there's going to be less offerings out there in the future. And so the treasuries are moving up as a result, which is really the opposite of what the Federal Reserve wants to have happen, right? The Federal Reserve is basically doing everything they can to keep the money flowing and, give it these corporations every opportunity that they can. They're literally out there buying junk bonds, okay? Well, that's kind of interesting. So is it a warning sign? Well, I think it is, but we do have to temper that a little bit. I don't want to sit down and say, oh, equity markets are going to go down because of this, because that's certainly not the case. What we have is what we call a bull flattener. Let me explain. See, the move today, when you look at where the interest rates moved the most, interest rates were moving down, and they moved down the most in the 10 and the 30 year as opposed to the 2 and the 5. Okay. So what that means, because the move is further out into the future, that means that the growth prospects for the future are less. They don't think that we're going to grow as much. They don't think that there's going to be as much inflation. And not only that, but it appears that at least the best reading of this, of course, it could be much worse than that. But I'd say at best, they're saying that growth is going to be low for a really, really long time. So think of it as like the proverbial pie, right? The pie just got smaller and demand for the pie just increased. Everybody wants a piece of it, right? This is a really frothy market. Have you guys been watching some of the stuff that's been happening in the markets lately? It's getting really crazy, okay? Like last week we had Kodak, right? Big announcement comes out and the price, like just shoots out through the roof, and you go and look at Robin Track, 120,000 Robinhood traders got into this move, and it is lower now. So they all lost money. Or today with Apple and TikTok. So there's an announcement that Apple is interested in buying TikTok. So Apple moves up, and the move up made the market cap of Apple, the increase in the market cap was basically more than what TikTok is even worth. And then another news story comes out. Oh, we're not actually interested in TikTok. But then the tweet that was pushing that story got deleted. And so it's like a retraction of the retraction. It was just absolute lunacy today. And we were talking about it in Discord, and I asked, is there anything down? Equity markets did come down a little bit at the end of the day. But I was asking, is there anything down today? Like, where is all the money going and coming from? And somebody said, nah, I think the only thing that's down today is common sense. That's today's market. So I don't think that the equity markets have to come down, but I would be very cautious. Okay. First of all, we are coming into a time period where markets tend to be weak in September and October. Those tend to be down months for equities. But the bigger thing here is that basically where you're going to find yield, where you're going to find growth, it's going to be harder and harder to come by. So you can't just willy nilly FOMO into everything. I think that we're going to look back on this time period, and it's going to be a lot like the way that people look at the tech bubble, where it was like trading was so good for guys back then, and then after that, like trading wasn't very good. Okay, now trading when interest rates are low, trading is good because that means that hey, short term investments are basically going to give you just as much as long term investments. So it encourages you to make investments today, but you're going to have to be smart about those investments. You can't just FOMO into something because you saw something on Twitter or your friend is doing it or you saw a spike up in price and you don't even know what's going on, but you're just following everybody else. You're going to have to do your research. You're going to have to know where the growth is because there's still going to be a lot of opportunity, but it's going to be harder and harder to find. It's going to be more rare. Okay. So the smart investors that really know where to find it, they're going to really benefit. Okay. So that's the advice that I'm going to give you. Be careful with your money. And hey, we're going to be here every day. So we'll see what happens. Maybe a big downturn does it. I think I would kind of enjoy that because, man, this is just so frothy. But we'll see what happens. I'm here every day from 8:20 to 10:30 Eastern time. So make sure you subscribe to the channel and click the bell icon. That will give you notifications when I'm live. I will see you guys then. And in the meantime, stay profitable.